presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Marty in Worcester. Hey, Marty, what's going on?
Hi, Mr. O'Brien. How are you, sir?
I'm doing great, man. How you been?
Oh, can't really complain. First of all, I wanted to thank you for the bargain re-up on the gold report. I've been getting it for quite a while, and for a couple of years there, it was like an insurance policy. I'd say, oh, I got to buy gold, and the gold report would say, oh, no, not yet. And lately, it's like a winning lottery ticket. So it's working really well all around.
I appreciate the feedback, Marty. Thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. So everyone had a great 4th, safe 4th. Let's make it a great week, folks. Let's take a look at one of these Believe cards. This is by Ronald Dale. Those who don't believe in magic will never find it. Market-wise, let's take a look at it out here. We had the Dow Industrials down 44, NASDAQ off 33, S&P's off 6.5, gold contract flat at $1,320 an ounce. Silver down 5 pennies at $21.08. Platinum $1,496 an ounce. Light sweet crude down 61 cents, trading at $103.45 a barrel. Bonds, we had the 10-year up 5 ticks at 124.12, the 30-year up 21 ticks at 131.21. King dollar, let's see, down 21 ticks at 80.26. The euro up 12 at 136, and the yen trading down 21 at 101.85. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? We're at 1977. You're down $8. We do that with 570 million. That's a bottom line that you get light volume on your pullback. If we go to the SPY, which you'd expect, of course, on a Monday after the July 4th holiday, if we go to the SPY, it did 59 million shares. That 59 million is coming into about 105 million. We got to 197.22. We're at 197.51. That says, hey, guess what? You can test this high again. We'll see whether it gets any juice on the way down. That's on your S&P. We go to the NASDAQ composite. What do you have with the composite? She's down $34. We did 1.6 billion. Composite's also going to need more volume than that. If we take a look at the 3 Qs, you see the correlation inside the 3 Qs. You really had a sideways movement in the 3 Qs. You did 21 million shares, and she's coming into 31 million. Small caps, different ball game, folks. We go to the small caps. Let's take a look at it. Small caps, IWM down $2. It did 32 million shares. Got inside a lower range. Well, first off, what the small caps had done is this. When we go back to last week, the 1st of July, small caps got to, the IWM got to 120.97. What that was doing specifically, and that day we had 65 million shares traded. That was testing the high of 120.96, which was the high that was generated March 4th. It failed on volume, failed on price. 112 million shares versus 65 million, closed under the high, and on a longer basis, that's saying, guess what? Can't bust them up, you're going to bust them down, and we do have a high volume low on the IWM at 107.44. You had some juice inside the IWM today, no doubt. Gold contract. We go take a look at gold. What we have with gold is this. Gold traded flat out here today, rejected, lower price, had lighter volume. The way the gold and silver contract is lining up right now, folks, is that gold looks like it wants to trade to its March highs. Silver wants to trade to its February highs. Right now we're at 1320. The March highs in gold is 1395. What gold did out here specifically is this. The huge sign of strength that we had on the 19th of August, we did 238,000 contracts in the futures market. We backed into that. The first time we backed into that was on the 25th of June. You backed into it with 137,000 contracts. We backed into it on Thursday, last Thursday before the 4th, at 149,000 contracts. We tested that today with 77,000. This little baby wants to get up and trade into this 1392 area. We go over to the silver contract. We take a look at silver, SIU4. What we have with silver is this. Same type of setup, different high, however. Silver today was flat, $21.08. Volume-wise, out here we did 28,000 contracts. That 28,000, what silver has been doing is actually pushing the 21.25 that was generated on the 27th of June has volume. And that's pushing swing highs with volume. So silver is the 21.08. She wants to run up this 22.16 area. Bonds, the ever-ready bunnies. Let's go take a look at bond market, folks. It's just wild watching it. So, 10-year bond today, what does it do? Well, first off, let's go back to Thursday. So what we did on Thursday, folks, is this. Thursday, the 10-year went from 124.16 to 123.26. We were pulling into the bottom of the consolidation with lighter volume. The lowest swing point is 125.25. Didn't make it to it. Bottom line, you're going to see bonds 10-year, once again, make a run for the 126 area. The way that this 10-year is set up is that it looks like it wants to trade up to that 132. Right now the yield on the 10-year is 2.616. The 30-year, we go take a look at the 30-year bond. What you have with the 30-year is this. She was up 21 ticks today. We did 193,000 contracts. This is after last Thursday. The 30-year also rejecting the lowest swing point at that 134.15 area. We got to 134.11, rejected it, closed at 135. 30-year, the swing point on the 30-year is 138.10. The way the 30-year, folks, is set up is that 142, we put this on a continuous contract. What you're going to see is this, is that it's 2 years, about, well, it's just a little bit over 2 years right now that we had topped out in the bond market. That was the high that was generated. That was, actually, it's just 2 years ago. It's June of 2012. It's hard to believe. 2 years goes quick. Bottom line, that's bonds were at 153. We're at 135 on a continuous contract. 142 is ICE, meaning that you can come up to ICE and the bulls and the bears can make a case at that level. The bears would make a case that that's just a counter trend bounce up to that level. The bulls would make a case that it wants to go to the high. The way that case would be generated, I'm a bull in the bond market, is that you did a natural retracement. You came back to the August, yes, it's the August 2011 breakout area. You did it with lighter volume. We did that in December of 2013. You've been going up since then, and you've been going up with volume. You're pulling back with lighter volume. You have wide price spread. You have all of the above. Our phone number is 877-927-6648. We get over and we take a look at the dollar index. What we have with the dollar out here is this, DXU4. So dollar index last Wednesday had a huge sign of strength. That's when the dollar went from a price point of 79.97 up to the 80.60. Couldn't hold price. Big volume up there, though. The dollar is building cause to get up to the swing point of 81.17. I suspect to get to that 81.50 mark. What's going to get intriguing, of course, is that with the dollar wanting to go, can gold simultaneously go at the same time? Airlines out here today were getting hit in a big... Actually, you know, airlines have been getting hit for a few days now. And they're getting hit coming off the highs with volume. You know, if we look at Delta Airlines, she was down $1.70 today. Breaks a swing. Has volume of 19 million. She would have needed more than 36 to do an ABC structure on the way down. But you get that 30.54 that's just sitting out there and it looks like it wants to get hit. The theaters got hit out here today. AMC Entertainment, that was down 56 cents. Had volume coming out of it, though. That was a counter-trend bounce that had started to try to get back up to its March highs and couldn't handle it. And the fundamental aspect behind the movies coming downtown, folks, is that it's a big number. The summer movies right now are down 20%. That's a huge number. So it's like, okay, is the internet taking it over? YouTube taking it over? Is on demand taking it over? What is basically taking a lot of that over? You also had inside that sector, IMAX. IMAX was off 30 cents, and it's not the 30 cents as much as that same type of deal. IMAX was coming up to the top of the consolidation at $28.93, and guess what? Couldn't handle it. 877-927-6648. Give us a call, folks. We'll be coming right back. We had Dow Industrials finished down 44. NASDAQ off 34. S&P's off 6.5. We're going to be right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Starting tomorrow, folks, Alcoa kicks off earnings once again. Bottom line, they just seem to come fast and furious. Some of the high-volume stocks we had today in a low-volume market. You had Apple up $1.93. We had, let's see, Rite Aid was down 9 cents. You had Facebook off $1. Twitter was down $1.10. You had, as I said earlier, Delta Airlines, that was getting hit. GoPro was up $2.38. You had CBS Outdoor Advertising down $1.06. American Airlines, another airline going south. If we take a look at American, that was down $1.52. And this is a classic. What you had, your first high up in American Airlines generated on the 9th of June. You got to $44.43. You did 11 million shares. Now watch this. You come off the high of 44.43, and you get down to 38. $5, right? Now you get a high volume low at $38.84, 37 million shares. Now watch just how deviant this market is. You climb all the way back up to the high again. You get up at the high with 18 million shares. You test it again with 41 million shares, but it just doesn't make the high. The high that we generated was 44.88. We turn around and get to 44.75. You come off that. Right now we're heading to the swing low, which is that 38.85, which is the high volume swing low. Now that's on the daily basis. We take this and you put this on a 2-year weekly basis. Actually, I'll put it, because this is this American Airlines is a whole new chart somehow, the way that this one come out of BK, I guess. So what we have on the 2-year weekly chart is that what's sticking out like a sore thumb is 37.48, which was the high that in April. But what we do have here, folks, is that you are coming off those highs with some volume. If we go to Delta Airlines, we look at Delta. Delta right now is at 36.90. We put this on a let's put this on a couple-year basis also. And what you're going to say, this could be a big hit. So check this out. I'm going to actually put Delta on a monthly, because on a weekly, we're at 36.90, and what's sticking out like a sore thumb, the last time that we had the price and volume action was $20.74. That was September of 2013, the week of September 6th of 2013. We put this on a monthly basis, and it's the same setup. And this is what's so wild about this. The airlines, folks, went straight up. I mean straight up from September of 2012. So if we just took the bottom of that trend of 2012 to the top, a normal 50% retracement, whether it's, a good stock or a bad stock, is $25.60. And the high of the last time it had any volume is 24.10. So in that context, that could just be a normal retracement on an equity that actually does want to go higher, because the 50% retracement, because it has gone so far on that one streak, that's all it is. But, of course, that you wouldn't want to be in the middle of that, because that's a huge, huge move. When we take a look at Goldman Sachs. Goldman Sachs out here today, she's down $1.65. Not a huge deal. Looks like the consolidation is still in place out here. If we take a look at the XLF, the actual financials, the financial sector, she also is refusing to back off. BRK, Berkshire Hathaway is the largest weighting inside of this sector. Berkshire Hathaway, the B shares are at 128.70. And what the B shares are trying to do is this. The B shares made a high on the 7th of May. That high was 129.73. We come off that high with some juice. You're going back up to test that high. The high that it looks like it wants to test is the 129.73. If we do go over to the FTSE and we take a look at these European markets for a second, this is what you had today. Now, this is going to get intriguing, and this is why. The FTSE, folks, hasn't been able to hold the high in the past 6 months, and it's tried 4 separate times. The high that we're talking about is 68.67. It comes off that high today, and, you know, it goes down $42, which is pretty good. Volume, though, is still going to be light. So it's like, okay, are you going to try to get to the lower end of this consolidation that the FTSE has failed to break out of? Well, if we go over to the DAX is basically giving us a heads up that, hey, guess what? I think it is. What the DAX is also doing, folks, is that the DAX loves operating like the NASDAQ composite. Now, I won't get the volume on this DAX until a little bit later today. The DAX is at 99.06. Once it's inside 98.10, okay, which would be another $100, that'd be a failure. That'd be a huge failure. And that would basically set up that it can get to the bottom of the consolidation, which is that 89.13 area. So that's a big number. Now, inside the market, what we had out here today, which is absolutely a heads up, is the IBB. The iShares of the NASDAQ Biotech Index. This is the index, folks, that first came down with a vengeance and took the NASDAQ with it. This was on February 25th. February 25th, the IBB was 275. We went straight down to 207. Now, what we have at 207 is this. We have a high volume low. High volume lows love to get tested. Watch how the IBB came into ice. One of the first accelerations down off the high, it was 273 to 260. That was done February 28th. We did 3.2 million shares. Now watch this. Your correlation, you went into the 3.2 million shares with 742,000 and 613,000. Give me a break. Not even close. What happens today? 1.9 million. That IBB, folks, is set up to get into this 220 area, you know, and we'll see. We put this on a weekly, and on a weekly, this is so pretty, it's amazing. On a weekly here, so you check this out on a weekly. On the weekly basis, you had the high established at 275, 8.4 million. We went up and tested that last week with 3.4. We would have to add in a day and a half, but you can see that even adding a day and a half of volume. Why? Because we had the market close at 1 o'clock on Thursday, closed on Friday, so you add a day and a half of volume, still won't even be close. What is sticking out like a sore thumb out there is that 207.48. That's on your weekly. We put this on a monthly basis. On a monthly basis, it's pretty amazing, actually, because on a monthly basis, we had the high that was established at 27 million shares. You come off the high with 57 million, check it out, and 76 million. That is amazing. That is huge. That is a dumping of assets inside the IBB very, very quickly. The weighting structure inside that IBB goes like this. You have Celgene is 8.4%, Gilead Science is 7.7%, Amgen is 7.6%, Biogen 7.4%, Alexa Pharmaceutical 6.5%, Vertex 4.9%, Illumina 4.1%, Mylan 3.7%, Regeneron 3.6%, and Endo International is 2.2%. 877-927-6648. Give us a call, folks. I want to know what's going on in your world. In the world of the markets, folks, we ended out, finished down 44, NASDAQ off 34, S&P's off 6.5. You stay right there, folks. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had American Express down 44 cents. You had Boeing up 58. We had Disney off 25. Walmart was up 32. We had Microsoft up 19. Let's go to Jim in Boston. Hey, Jim, what's going on?
Not much, Tom. How you doing, buddy?
I'm doing great. You having a good day?
Oh, great day. Yeah, beautiful up here.
That's good. Summer finally hit, huh?
Y'all, it came here fast and furious, and I hope it stays.
It will, man. That's a beautiful thing.
Yeah.
You need a good summer, man. What are we going to look at?
Tom, I bought Yahoo probably about 2 months ago at 32 and change.
Okay.
And, when do I put money in my pocket?
Let's take a look. So the low's 25, the high's 41. You're at $35 right now. So what you have is this. She's in a consolidation. And, the reality is that she just went up and finished that gap. Okay, so watch. What you have, folks, is this. The consolidation started, the lower consolidation started on the 3rd of April. We went from 36.79. We got down to 32. You had volume down there, 47 million. Made a swing low at 32.15. You go back topside, and it can't stay in the upper range at the 37. We hit 37 on the 16th of April. You come all the way back down again to 33 with volume. The way this is set up right now, Jim, is that it looks to me like it wants to get on the other side, right back into your good old 32. I would be taking some bread and, making, you can put a stop in. That's one way you can do it. You just take the bread. You get some good bread there.
Oh yeah.
Because right now this is a consolidation, and it went up and filled the gap. Okay.
Yep.
That's what it did. That's on the weekly basis. On the daily. On the weekly, this is set up to get into a lot lower price. Your first swing low is 34.45. Your second swing low is 32.15. We turn around. If I put this on a monthly basis, what you're going to see is that the first leg down in April, 32.15 is a high volume low. With, so it wants to be tested. So
all right.
Take some money, man. Time to go bring the wife to the Four Seasons.
Yeah. How about the clam box? I'll take it.
Hey, the clam box is a beautiful thing. Oh, let me tell you something, man. The clam box is beautiful. I haven't had clams. Folks, if you've never tasted clams, what city's that in? That's in, is it?
Ipswich.
Ipswich, yeah, exactly.
Yeah.
They're the best clams in the world, folks, and it's better than the Four Seasons. That's a fact. Particularly when you can't get them. Down here, they don't even know what clams and bellies are, I don't think. They do, but you know what I mean. It's like, have a great one, man. Have a safe one.
Yeah, thank you. You too. Bye.
877-927-6648. We go take a look at the GLD, folks, okay, the Street Tracks Trust. This is what you have with the Street Tracks Trust. Now, this thing is setting up really nice, folks. This trades at 10% of the price of gold. We're at 127.02. The swing high from the 14th of March is 133.69. This had a huge sign of strength, as did the gold contract and silver contract in the metals and the futures on the 19th of June. This went from 124 to 127. It actually gapped away monster volume, 24.3 million. We come into that today with 4.6 million, reject lower price, do it on lighter volume. This thing is a clean setup that it looks like it wants to make that charge for 133.69. If we go over to the SLV, which is the iShare Silver Trust, trades at the price of silver, same type of setup. The high in silver is February, the highs in March, highs in gold are in March. And this equity right here, the SLV, the high is 21.30. We're at 20.17. Same type of setup. Silver is and seems to be much stronger than gold. But what had happened on the 19th is that as soon as silver silver and gold start moving simultaneously, and then they all went. You can seem to get more information out of silver still because it's so strong. It stayed at the higher end of its trading range. The last time that even tried to nail it down, they couldn't get it down. It traded to 1993. That was on June 30th, and ended up closing at 2025. So that was actually pushing a high with higher volume. You start pushing highs with higher volume, folks, that's a market that wants to go higher. If we go over to the TLT and just look at the correlation inside the 20-year plus, because folks have been, just wondering, when will bonds basically blow up? Well, they haven't blown up since 1981, folks, okay? So, well, they had a couple vicious retracements since then, but bottom line, they've been in a bull market since then. The TLT, guess what? Wants higher price. We're at 111.49. That swing point of 115.19 wants to get tested. That's on a shorter term basis. On a longer term basis, you put this on a monthly. What you have set up on the monthly is this, is that when we broke topside in August of 2011, you broke topside with 489 million shares. You tested it with 146. That correlation is unbelievable. Now, this is the real cool part in the TLT. We've all been waiting for this 142 in the 30-year. Okay, that's make or break. And that's because that 142 could just be a normal dead cat bounce in a market that wants to go down. My take is that it's a market that wants to go up, and, we'll get some juice underneath that. The TLT right now, folks, is setting up building the cause. What the TLT has done is this, and this is on a monthly basis. We come off the low in December, 101.17. What do? You go right up to ICE. We go to 115.19, and we do 167 million shares. Now, it's going to need a lot more than 167 million shares to bust into the 115 to 120 area. You're going to need a couple hundred million. Well, watch what we've done. You're up to 167. We did 164 last month. This month just started, but what we just did is that we backed into the lows of the last 2 months already. Rejected them. Your A point on this can be 101. Your B point is 115, so you got 14 bucks. Your C can be the 110, right? The low that was generated last week. You get 14, that's 124. Guess what? That A to B equals C to D would bring you right under the swing high that was generated in July of 2 years ago. That's the type of movement that you want to see if you're a bull. Why? I don't want to see a straight line move up to that because the market will get tired. It'll run out of gas. What you'd like to see is right what we've done here, meaning you go sideways for 3 months, you pull back on lighter volume. As it starts making its run, of course, what we're going to need is expanded volume, expanded price spread. You get that, your probability goes much higher that you'll build some more cause at the 125 area, right under the high that was generated in July of 2 years ago, and we'll see whether it can bust over that high. Right now, those babies are setting up, and they're setting up in a great way. That's on your technical basis. On your fundamental basis, folks, the bottom line is that when we look at the 10-year rate, competition across the world, we're at 2.6. You can get 3.3 in Mexico. The United Kingdom, you get 2.7. France is only paying 1.6. Germany, 1.5. Italy, 2.8. Spain, 3.5. Greece, 5.8. Bottom line, you start pulling those up there, it's like, guess what? It's just competitively, as folks are putting money to work, and what I mean specifically is pension funds, sovereign governments, large corporations, as they're doing that, they look at all it. And what I also mean is this, is that people just don't buy stocks. Under certain rules, they have to be in the bond market, they have to be liquid, all of the above. When you take a look at this on a fundamental basis to where these rates are, our rates are high. If we go to Australia, now this is where this gets interesting. Australia is 3.5. What you have to do with Australia, let's just go bring it up. So if we take the Aussie dollar right now is at 93 to the U.S. dollar. We put this back on a monthly basis, and what you're going to see is that the Aussie dollar topped out at 110. That was in July of 2011. The Aussie dollar basically looks that, wants to try to get back down to 60 cents. So at 60 cents, what you have is what? You very well, you would be getting a higher rate, meaning instead of 2.6, you're getting 3.5. But guess what? The way that the Aussie dollar is set up right now, in 3 or 4 years, maybe 2 or 3 years, it's going to lose a third of its value. 877-927-6648. We ended out, finish down 44. NASDAQ off 34. S&P's up 7.5. You stay right there, folks. We're coming right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. We had the Dow finished down 44, NASDAQ off 34, S&P's off 7. Don't forget, folks, at TFNN we do 9 hours of live programming every trading day. You can get all of that programming right on your cell phone. You put TFNN.mobi in the browser. You'll get the full audio stream. If you'd like to get Tiger TV, just go to TFNN.com. On the right-hand side, you'll see a little box with devices in it. Hit that box. Our servers are going to know what type of device you're on. You'll get Tiger TV with all the audio and, of course, all the charts included. XLE, the energy market. What do we have with the energy market? So we take a look at the energy market. This is what you have. It was down 77 cents today at 99.62. This had come off the high. Well, first off, we had made the high on the 23rd of June, 102.52. You made that with 7.9 million. You came off that high with 17 million. We tested that high with 6.8. So you're down with 17. You test with 6.8. We do 6.8 in a way lower today. We'll see how she comes in and hits this lower swing point. That lower swing point being the 98.64. You hit that with volume again. What that would do is that would set up a failure. Why? Because actually, we'd have to get back inside 91. That's quite a way to go down. But here, you really want to see how this energy market's set up, and this is why. The highs of 2008, folks, in the XLE, 91.42. The swing points there had 560 million shares, and we were up there for 3 months. And I'm actually taking the smallest one. Yeah, 566 was 1 month, 638 was another month, and 850. Well, we took that out with 236. Then we did 181, which is just amazing. Okay, so you get back inside that 91.42, and it sets up a 77 price point. You know, we'll see whether how we get back inside that number one. Whether we get back inside that, I do expect we're going to. It'll take a bit, but this has been up there, taking the swing point out, took it out with dramatically lighter volume. What you want to remember is that the longer that you stay above a swing point with lighter volume, particularly lighter volume like we're talking about almost 75% lighter volume. When you get back inside that swing, it sets up that you can't bust it up, you're going to bust it down. It's just the opposite correlation when you're looking at the aspect of when these gold and silver equities were going downtown. As they got to lower price, they came into that lower price, their volume contracted dramatically. They didn't want it any more lower price. Guess what? They get back inside the range, and now they're heading to the top of their range. If we go look at Anico Eagle, that is basically quite a classic. Anico Eagle came down hard from $35. If we just look at the last 6 months, came down from $35, gets into 26, rejected lower price. Guess what? Not only gets over the swing point of 35.46, but it had huge volume. 3.3 million and then 3.8 million versus the swing point of 1.8. The key behind that structure is that you have more buyers. That's what that comes down to. You know, when you look at the aspect of where it is that's on a shorter term basis. Shorter term basis, guess what? Wants to go higher. Longer term basis still has some work to do. You know, it's amazing that when an Eagle came down, what it was doing is it was trying to test the low that was established in 2008. That low, that was 2087, had 132 million shares. We got down to 2377, so the test was 49 million versus 132. Comes off that low with some juice, you know. So the next struggle for an Eagle will be up this $45 to $57 price point. 57 is actually ice for an Eagle, which is pretty amazing. But it makes sense. You came off $88 and you get down to 20. Talk about a retracement. 75% down, right? And the price of gold, you know, came down, of course, but didn't. Yeah, I guess it came down pretty good. Oh, this is going to be pretty cool. So the numbers of the GLD just come across. Now, this is what's changing right now, and has changed, folks. The GLD, of course, Street Tracks Trust, right now is, and this is the third day in a row that this has happened, and that's the first time since April, I think, of 2011, actually, that the GLD, the sponsor of the GLD, is in the market having to buy gold. That is a huge difference. Why? Because that is a natural buyer. When gold was going down, of course, that was the disaster behind, that was one of the disasters behind the gold and silver market. As gold continued lower, the largest owner of gold, meaning the GLD, the SLV, they had to sell every single day. What's happening right now, without gold moving that much higher, you know, when you actually look at this today, gold is flat. Well, guess what? The GLD is still out there buying tonight. And that puts some nice juice. Let me just see if I just saw this come across. That puts some nice juice behind the market, because the way that this is set up, which I said a little bit earlier, it looks to me like the GLD and the SLV are both set up to do an ABC structure on the way up. It's going to be how we overtake the B point on the GLD and the SLV. Will we get enough juice inside it? What we need is about 18 million shares. And you know, that's not going to be easy to get. That's on the GLD. On the SLV, taking a look at this, what we're going to need, we're 2017 right now. The SLV is going to be a lot easier to overtake it, because the SLV only needs like 7.5 million. We did 3.9 today. 7.5 million can get you up into that $21.30 area pretty quickly. And the key, of course, once you get inside of that, is that your next stop in silver, the SLV, would be $25. So that is a big number. If we go look at the GLD again, that'll take some point. That'll take some time, meaning you have to build some cars in order to get up into that. We go take a look at the GLD. She wants to run to this 133.69. She's going to, yeah, see, the SLV set up better, and so is the silver contract. The GLD is going to need more work. It's going to need more, well, let's put it this way. It doesn't mean, it needs more work, it needs more volume, but as we saw a couple weeks ago, when it stopped moving with a vengeance. The GLD can catch up very quickly. You stay right there, folks. We're going to be coming back, of course, next hour. We have Tigress Amy Smith from IBD, and we're going to have man AJ from TD Ameritrade Think or Swim. This is Tom O'Brien. This is TFNN. We ended our industrials finished down 44. NASDAQ off 34. S&P's up 7.5. We're going to be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
This is TFNN.
following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Tom in Derry, New Hampshire. Hey, Tom, what's going on?
Mr. O'Brien, how are you today?
I'm doing great, man. How you been?
Good. This is like old timers week. I heard Rick from British Columbia. I'm waiting to hear Greg from Long Island.
I like that. Totally, man. Totally.
By the way, your website, unbelievable. Watching that thing change over the years. You guys are doing a bang-up job. You get great guests. And
well, listen.
Good work, man.
We appreciate you being out there. We never can do it without all you tigers and tigresses, Tom.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great 4th, safe 4th. Let's make it a great week, folks. Kicking right into the summer. This is a quote by Richard Bach. To bring anything into your life, imagine that it's already there. It's no doubt. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow down 44, NASDAQ off 34, S&P's off 6.5, gold contract flat at 1,320 an ounce. Now, when you have a gold out here is this, folks. She get into lower price today, rejected lower price, did it with lighter volume. The low that was generated was 1312. We're at 1320. We did 78,000 contracts. The high, last swing high in gold is 1392. That's what she's building strength for to get up into that level. Gold had that huge wide price spread, accelerated volume on the 19th of June. We backed down with lighter volume, rejected those lower levels quite a few times. Silver, same setup on silver. Silver is actually, the physical silver market is actually stronger than gold. What you have with the silver market is this. She also rejected lower price out here today. SIU. Did lighter volume. Silver right now is at $21.09. Your last swing high is at $21.16 in February. Silver looks that also wants to make a run up to that February high. Bonds, the ever-ready bond market, 10-year out here today. She rejected lower price also. 124.13 at the 10-year, and what you do have is that the last swing point is 126. I expect she's not only going to go into the 126, she probably will take that out with volume. 30-year bond, same setup. 30 years really strong. We did 195,000 contracts out here today. She wants to get into this 138. Now, in both cases, folks, the bond market last Thursday had come down into the swing points that were generated in June. Rejected the swing, lowest swing, had lighter volume. What that sets up, can't bust them down. Now you're going to try to go bust them up. We'll see how it works when we get into this 138.10 area. Right now, that's how that is set up. We go over to the King Dollar. What we have with King Dollar out here is this. She had a sideways movement out here today. We're at 80.26. That's, of course, after the King Dollar had gone from the 79.97 up to 80.60 last Wednesday. That was a huge move. Had the price spread, had all of the above. What is going to be interesting to watch out is it looks to me that the dollar, we're at 80.26. She wants to run into this 81.50, but yet gold also wants to run higher. Euro. We go take a look at the euro. What you have with the euro is this. Euro right now is trading at 136.05. She's at the lower end of consolidation she's been trading for 6 months. The 134 area, folks, we break that 134 area, and what you'll see very quickly is, that'd be pretty intense. Oh, 1 second. I was going to give you 118, but can't get down to 118 that quick. See, what you have here is this. This is pretty amazing, actually. So when we bring this back, this consolidation that we've been in here started in December of this year. The last swing low was 2 years ago in the euro, 120 or 136. So you get 2 years. Goes up for 2 years, well, goes up for about a year and a half, has gone sideways for 6 months. That move higher, however, was an anemic move, meaning that when we take a look at highs to lows, what you had on that move is that was only a 50% move higher. And that's a normal move. You know, you go down, you bounce 50%. You go up, you come back 50%. That's a normal move, and the market wants to go up or down. So what does that mean in the context of where you're going to go? Well, what you do have with the euro is that you have a lot of support at like 131. I suspect we're going to get into 134 and break it. The 131 is going to be game. That's when King Dollar wants to take off top side, and we'll see how gold shakes out in that context. I have seen gold and silver move 2 separate times when the dollar was moving also. And with that, the way that it did it is that, yes, the dollar moved much further percentage-wise than gold or silver. And this is where it made up for it, though. And what ended up happening is that on retracements, the gold and silver market did retrace, but retraced less so even when the dollar was going higher, so that in the basis of whether it's 2, 3, or 4 months, you actually had gold and silver still continuing to climb higher. That's the way this baby looks like it is setting up right now. If we go to take a look at the XAU, the XAU right now is at 99.98. That's the gold and silver index. The last swing high up there is 107. She wants to run for that 107. And that'll be pretty easy, folks, because the XAU has already ran 13 points, 16 points off its low. So all you're looking at this particular point is an additional 7 points to get to the swing high. The HUI, which is the gold bugs index, she is at 235. That swing high is at 261 up there. What I do expect we still are going to see, and this is slowly going to start happening, is you're going to see some of these companies start hedging some of their gold supply, which will put more supply on the marketplace. But what we have had in the past few days, which we hadn't had since 2011, is an expansion of the buying in the GLD. You know, when gold was coming south, when it was going down, huge problem, because each and every day, guess what? The GLD had to sell physical gold into the marketplace. As physical gold gets sold, what ends up happening? Of course, it's the hot potato. Who's going to hold it? You know, gold trades 24 hours a day once the market opens again on Sunday night, and it goes all the way up till Friday afternoon, USA time at approximately 1:30. So, is it important that the GLD is back buying? Absolutely. And all you really need right now, all we need in the GLD right now is another nice surge. You get another wide price spread and accelerated volume, and you can see how one move begets the next. You know, you move from the 127 up to the 133, that contract itself would be going like this. The contract would move from the 1321 up to approximately 1392. That in itself will not only put juice inside the gold market, will actually put a lot more juice than expected inside there. Why? Because this is how it works. First, the futures would move, then the GLD would have to come in after the fact, buying simultaneously. What would end up happening, derivative-wise, during the day, they'd protect themselves. But what would end up happening is that they would be physically in the market buying, and physical gold inside the market. That is the demand that the gold market needs right now, I suspect, is going to get. We go take a look at the financials. J.P. Morgan, she's going after a lower swing point, has some juice behind the move, meaning the last swing point, last low, is 56.33. We did 11 million shares. Today did 13 million. You made 56.40. She wants to go after that level. If we take a look at J.P. Morgan, we put this on a 10-year basis. The way this is set up right now is that if she gets back inside 53.25, that'd be a false break topside. When we take a look at it on a monthly basis, she didn't have any volume up at these highs. She's pulled back $4. Not that it's a lot, but the real key is going to be, can she trade back inside 53.25? Because if she does, then you're going to see that she'll get down about that 44 level. And it's like, okay, are these financials basically ready to roll over? If we take a look at Citigroup, which never had any much strength behind it, even on the bounces, I believe Citigroup's going to be coming out with their numbers, next Monday. So tomorrow kicks off earnings. Tomorrow we're going to have Alcoa is going to be coming out. Next Monday you got Citigroup coming out. And from then on, you're talking about a lot of earnings. Next Monday, next Tuesday, you got CSX, you get Intel, you get JP Morgan, you get Yahoo, you get Johnson & Johnson. Wednesday, we get Bank of America, eBay, SanDisk, Yum Brands. Thursday, Capital One, Google, United Health. Friday, GE, Honeywell, and Kansas City Southern. You stay right there, folks. Coming back with our Tigers, Amy Smith from IBD.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details, and to start your 30-day free trial today, log on to TFNN.com now.
Investors, Taz Market Research delivers to his subscribers expert commentary on the analysis of 50 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had American Express down 44 cents. You had Boeing up 58. We had Disney down 25. Oxy was off 58. Walmart was up 32. And right now, let's go to our Tigress, Amy Smith from IBD, as we do each and every Monday at 20 past the second hour. And, folks, if you haven't test drove either Investor Business Daily, the print edition, or Investors.com, the digital edition, come over to our website at TFNN. See the banner on the right-hand side. Hit that banner. You get 2 weeks right here, right now, either the print edition or the digital edition. Amy Smith, what's going on?
Hey, Mr. Tom. Did you have a good July 4th?
I did. And yourself?
Good, I did. You know, we did several different things. Went out to eat and all that stuff. But we went to the Pompeii exhibition down at the Science Center. And it was cool. You know, 79 A.D., city vanished after the eruption of Mount Vesuvius.
Yes.
And it's just astounding. They had this vibrant city. They had great culture. They had delicious food. They were right along the trade route, so they got all kinds of, great different kinds of foods. They grew all kinds of delicious foods, and then, Mount Vesuvius erupted, and it was just gone.
Overnight, folks.
Overnight.
Amy, I've been there. I've been to the actual village, and I spent 2 days there. It was... If you've ever, folks, when you go to Italy, you have to go there. It is amazing. I mean, it just is you can't believe it. There's people, they still have their teeth, and you're looking at these skeletons, and they still get teeth, and they're still doing things, and they're digging this whole city up like with little tiny spoons. It's amazing.
It's unbelievable that they were able to unearth the entire city.
Yes.
Amazing.
And you can sit in it. I mean, they have it set up really cool. It's not even like a museum, folks, that something's behind like big walls. You're right next to it. You are literally within 5 feet of some of these folks that used to be human. That unfortunately,
fascinating. Well, they were frozen in time.
Yeah.
With the hot ash that came down. They had a movie reenactment of what happened during the eruption. They would say like 7 a.m., 8 a.m.
Yeah.
So you could see exactly what happened. It was crazy.
I know.
Yeah.
Yesterday's gone. Tomorrow's not here. What are you doing right now? Enjoy it, baby. I'll tell you. Oh, man. I'll tell you. That's so cool, Amy. That's great that they're bringing it. I suspect they're going to bring it across the United States. That's pretty cool.
I would think that's what they're doing. It seems like some of these things are on loan, obviously, from a museum in Italy.
Right.
And they've put together this show. It was extremely, really, really interesting, really popular. So I don't know where it's headed next, but it was fun. If it comes to your city, go see it. It was interesting.
Now, listen, you're on the way to Boston. Is there already next week?
I'm going. You know what? I don't think I'm going to be able to go to your pizza place because I get in late Thursday night, and then Friday night I'm speaking, and Saturday morning I'm speaking. So I'm trying to figure out when I could get up there.
Friday night you're speaking?
Yes.
Yeah, so Friday morning. Go for breakfast.
Are they open for breakfast?
Yeah, they open at 10 o'clock or 11 o'clock in the morning.
Oh, okay. I'll go for lunch.
Yeah.
That'll be perfect.
Yeah. Listen, I'll get all these tigers and tigresses to meet you there Friday morning.
Okay.
You can teach them where you're eating pizza. Yeah.
There we go. Pizza at 10 a.m. with Amy.
Totally. Okay, so let's go. Greenbrier. This had quite a run, right?
It did have a big run. Now today we had this broad-based sell-off. I have a feeling that Jonathan might have sent you a script. Did he give you a full script, or he give you sort of thing that was like a half of one?
A half of one.
A half of one. Well, I'll help you through this because I sense that you might not have the right material. But we had kind of a stealth, sort of an ugly day today. They were sort of hidden selling.
Okay, especially the small caps, right?
Yeah, the small caps and some of these newer IPOs that have been doing well got hit. Gaslog. It seems like investors are pretty nervous. We're heading into earnings.
Yes.
Tomorrow we start with Alcoa, which I know is your favorite.
Yeah.
So I think probably the way to handle this is, since we don't know what's going to happen, we're just going to have to wait till some of the bigger companies report. I think it's a good idea if investors have some sort of a plan.
Yes.
You know, what are they going to do if they own stocks? Do they know how much are they up on their position? If a stock is ready to report, if you're sitting in a stock and you don't have too much of a gain,
right,
and you're heading into earnings, it's kind of Russian roulette.
Yes.
I mean, you know, anything could kind of happen. You could report well, you could be doing great, or it could really not report well and you're in trouble. So when you go into earnings season, I really recommend everybody has some sort of a game plan.
And, you know, the last show that we did with Bill O'Neill, you know, he brought up many times, Amy, and I know, you know, you will bring up the same thing, that, listen, when you're up, you know, substantially, you should be taking your money. And,
well, sure.
You know. And
you know, you can pull some money off. Have you tried another thing I brought up here is Kroger's. The ticker symbol there is KR. Have you ever ordered groceries online? Have you guys tried that?
I haven't.
I haven't either. I don't know whether this is going to work or not, but Kroger's, they also operate, we have Ralph's out here. I guess you guys have Kroger's.
Sure.
So it's a big company, and they bought a company called Vita Cost.
Okay.
And they're trying to get into web-based shopping. They're kind of copying what Amazon did. There's Amazon Fresh.
Okay.
And I guess Amazon's in 3 markets. I haven't tried it. They're in Seattle, Northern, and Southern California. So you can order your groceries right now with Amazon Fresh. So now everybody thinks that they need to copy what Amazon is doing. And I think also a lot of these companies are trying to put pressure on Whole Foods and all these other natural food chains. So
that would make sense.
Yeah, it does. We'll see if they make any headway here. I just don't know if I would do my shopping for my groceries online.
You know what I would do? I wouldn't do them all, but I would definitely do, like, coffee beans, like, you know, tissues, you know what I mean? That stuff that butter, you know, stuff that I know exactly what I want to order. Do you know what I'm saying?
So stuff that you could just buy, you know you're going to use it.
Yeah, and I'd buy, like, you know, 2 or 3 of each one of them. Do you know what I mean? Just like when you go to one of those Costco's and you can't get out of there without spending $500. Do you know what I mean? But it'd be pretty cool buying that type of stuff, and someone delivers it to you. You know, the Amazon Prime is like insane, $79. I think I've told you, I've had them deliver bathtubs to me. It's like,
I know. Well,
that's pretty
funny.
Sick.
So
it is.
Maybe I guess people will get their get their food this way. One thing that I thought, you know, Kroger's has slowly, and so has Ralph's. They've just slowly introduced a little bit more and a little bit more of the organic foods, and I was surprised. Kroger's had double-digit natural food sales in the last quarter, so they've doubled what they're doing in that particular section. So I guess people, you know, we're looking for food that's not chemically as altered and all that stuff.
You know, the bottom line is that cancer is everywhere. It's like no one can, you know, figure it out. I think no one can figure it out because there's just so many new chemicals every day. It's like, hey, you know, well, I mean, we're putting something in, you know, that whatever you put in your body is, you know, is a bad scene. So if you can eat less chemicals, you got to be better off, you know.
Right. I agree with that. And I even think about, like, our water, not so much where you guys are, but you know, they add so many chemicals out here to our drinking water. So that's why
we have a few problems in Florida too.
Oh, do you?
Yeah.
Yeah.
And it's important. You know, it's like we got to take care of ourselves. It's like there's some stuff that's pretty simple, and what we put into our body is definitely simple. Now the problem is, of course, can people afford the food that's not, you know, hot bombed? And that's a problem, you know.
And I think that's why, you know, Kroger's is really trying to be more competitive with Whole Foods because, you know, Whole Foods is very expensive. And I think a lot of these grocery stores are trying to bring some of those costs down.
And they'll be able to. Yeah. Listen, you have a great week, safe week. Look forward to speaking to you right here next week. And hey, have a great time in Boston.
I will.
Okay, thanks. Stay right there, folks. Coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. She had the Dow finished down 44, NASDAQ off 34, S&Ps are off 7.5. Let's go to Rich in Orlando. Hey, Rich, what's going on?
Hey, Tom, how are you today?
I'm doing great. You having a good day?
Beautiful, beautiful day. It's a little humid here in Central Florida, but it's a beautiful day.
Yeah, we had that heat come in last week, right? This is it for us,
sure
I guess.
did.
Next
It sure
90
did.
days, right?
On this GPL, my question would be, is it accumulating or is it distributing? I mean, it looks like it's just been, between the small range here. They had a breakout, and then but for the last week or so, it's just been trading in this range.
So let's take a look at it. You get Great Panther Silver, folks. The low is 66 cents. The high is $1.38. That's in the last year. We're trading at 121, and this is building cars, Rich. I mean, that's the way this is, set up. I mean, well, if we bring this back, let's watch. I'm going to bring this back on a yearly so you can see exactly what we've done. So it's in a consolidation. The top of that consolidation is 134. You can see we traded at 134. What's so cool, folks, about the gold market right now, in fact, I'm going to bring this back, and I'll put this on 2-year weekly so you can see what we've done. The Great Panther made its low in June of 2013, so a year ago. That's when the gold market made its low. And depending on how long you've been listening to me, or if you get the gold report, you know that when you make long-term lows inside the gold market, what the gold market loves to do is this. And this is the third monster correction that we've had since 2002. It likes to make 3 or 4 runs that go about 30, 35%. And then it builds cars up in order to basically break out of ranges. This is a classic, okay? So this equity, like all the rest of the equities, got killed. Went from, I think it went from $5 down to
About $5.
Yeah, down to 65 cents. Comes off 65 cents. Now watch how it comes off 65 cents. June 2013, you get 65 cents, and on a monthly basis, you're doing 5.1 million. Well, it goes from 65, and in 9 weeks, it's at $1.34. So that's a 100% move, right? You're at $1.34, and you do 5.5 million. Now, it's hugely important inside the gold and silver market, folks, that you're always taking your money, okay? Bottom line, if you took your money then, great. You just made 100%, and you made 100% all of 2 months. What does it do? And the market loves to do this. Gold market particularly loves to do this. It's going to come all the way back, and when you have a retracement, of course, you don't know how far it's going to come back. What does it do? It goes from $1.34 in August of 2013 and comes back down to 66 cents. Now, it hit 66 cents with 1.6 million shares versus 5.1. Guess what? You have a test of your original break of the low, going topside, dramatically lighter volume. Guess what? There's your buy. What do? Goes from 66 cents, goes all the way back up to $1.38. Now, in this one, this is what's really dynamite. This one here, folks, and this was in February. It gets over the swing high with volume. Now it has a high volume high at $1.38. What do we do again? Guess what? You did another 100% move. If you don't take your money, guess what? It's going to take it back from you. So what do? We go from $1.38, and you come back down to 87 cents. Now this time at 87, you're doing 1.7 million versus the break topside of 9.4. Classic. Time in the trade. No two ways about it. Okay, so now let's go to the present, what Rich is talking about. We get off the low of 87. You push into $1.33, and we do 8.6 million. This is building cause, Rich, I suspect, not only just to get to the $1.38. I suspect that this thing here is going to basically try to make a run somewhere up to this $1.91 area. That's the way this is set up right now. That's just building cause. This is a beautiful setup, man. It has it. It has a high volume high out here on the daily at that 138. You're at 127. If we take another small ABC structure on the way up, your A point on this is 87 cents. Your B is 133. So what do you got? 33. You get 50 cents. Your C is 114. That's 164. And you can see the highs 138. That's why it looks to me like it's set up to run, way over that swing point. A lot of them are, actually.
Okay.
Yeah.
Appreciate it. Thanks so much, Tom.
Okay, man. Have a great one. Have a safe one.
You too.
And what you have here, folks, inside by the way, we own GPL. If you have the gold report, you own it. We own it. But if we bring this back a little bit further, what you're also going to see with GPL, which is so bullish, is this. GPL is one of the gold equities that has a high volume high at 504. That high volume high was generated at the highs of the gold market, which was in March of 2012. Markets don't end, folks, with high volume highs. So when it will get there, yeah, the time frame as to how or when it gets there is basically not accurate. What is accurate, however, is this: is that as it starts coming off the bottom, that's where it's going. And then what you do as you're analyzing it is that step by step, meaning how it came down, it build, bases, floors on the way down. As we go back up, it's going to have to bust through those floors. So picture the floor as like a 3 or 5, let's say a 5-family apartment building with floors on it. As we went down, it just busted through the cement, went right down, elevated down fast. As we go up, what you're going to have to do is you have to go and bust through the ceilings. As you're busting through those ceilings, the longer that it traded at a certain level, meaning, and when we take a look at from May of 2012 over to November of 2012, we traded from 151 to 230. Well, guess what? That is going to be a hard area to break through and into because it's traded there so long. Why? Because that supply line is huge. The supply line of the folks that are still trapped in that equity, when it gets back up to that level, there's many of those folks that are just going to want their money back. That's what a supply line's all about. As we get up into those levels, what we're going to be looking for is that we're going to be looking for an expansion of volume, an expansion of price to take out that supply line little by little. You don't have to have higher volume the first couple times you go up into it, folks. What you do need, however, is that each and every time that you're coming into that, you want to see real conviction. As you get real conviction coming into supply lines, some of that supply will be taken off the market. You pull back on lighter volume. Two different things end up happening. It's building more strength to get up there and get over that supply line, take it out. And, of course, that is on a technical basis. On a fundamental basis, it breaks down to you need more buyers than sellers in order to hold higher price. Great Panther, nice little setup. Another one that we do own out here is New Gold. What you can get out of New Gold is this, is that New Gold has already reached the highs of March. And this is what I like, because what you want to be looking at is that equities that are stronger in the sector that you're looking at, are they basically trying to give it up? Or, in fact, are they building cause for higher price? When I look at New Gold, guess what? That little baby is building cause for higher price. And that's really positive because we did 100% move for move, meaning New Gold ran from 495 all the way up to this 650 area, backed off with lighter volume. It's under the 652 right now. It's 622. But that baby gets over that 652 again, you're going to see some big juice in that. This also has been consolidating for a full year. 877-927-6648. We go take a look at, hey, check this out. This is, well, we got to be all over this. I got to look at this for a second. So is it, here it is. This is GTAT. Okay, so this equity here, this is GT Advanced Technologies. If you remember our man, Mr. David White, he was talking about, this is the Sapphire. This is what they do. They provide crystal growth equipment and solutions. They are the Sapphire suppliers to Apple. Now, this little baby got smoked today. It doesn't mean that Apple's not selling a lot of product. Because when I actually looked at this, what you have, this is down $3, $19.50 with volume, by the way. And if we pull this back, you know, it looks like it wants to go to the bottom of its consolidation, which is $12.74. That said, though, it's a sole supplier, meaning it's supplying the Sapphire screens that Apple are using. The key is Apple going to use these sapphire display materials on all their products? You know, we'll find out. But this baby definitely got hit out here today. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. We had the Dow finish down 44, NASDAQ off 34, S&P's off 6.5. If you'd like to test drive my gold report, folks, come over to our website at TFNN. You go to newsletters, investment newsletters. You can test drive the gold report 30 days, right here, right now. Coming right back, folks. Stay right there.
Andy Heck's powerful weekly newsletter, the Technamental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technamental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technamental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. You had Apple up $1.90. CBS was down to 69 cents. You had Facebook off $1. Twitter was down $1.10. Delta Airlines American, they got hit with volume, folks. Inside the IBB, this is a big number. iShares Biotech, now it was down $6. Not that $6 is a lot of money. It isn't on a $250 stock, but what you had, this is an absolute classic. The IBB, which is the iShares Biotech Index, that had gone, that was one of the first ones to turn, folks, in February. It went straight down from 275 down to 207. Now, at 207, it has a high volume low. It crawled its way all the way back up Thursday to 266. That's what it did. Okay? So, check it out. You had volume blow out of it again today. That it was testing how the downdraft that had been created right from the highs. The downdraft, folks, had volume of 3.4 million, 3.4 million, and 5.4 million. We tested that with 724,000 and 613,000. We did 1.9 million today. This IBB is on its way back to the 207. That breakdown, I suspect, is going to be fast and furious. The first time was fast and furious. The IBB itself, it's pretty well distributed weighting structure-wise. What you have in the structure is this. Celgene is 8.4%. Gilead's 7.7, Amgen 7.6, Biogen 7.4, Alexa Pharmaceuticals 6.5, Vertex 4.9, Illumina. There we go. So 1 second. Sorry. Illumina 4.1, Mylan 3.7, Regeneron 3.6, and Endo 2.2. Bottom line, she wants to go to the lower price. Let's go take a look at the platinum market for one of our tigers in the den, PLV4. So platinum right now, folks, is trading out at $14.95.60. And what we have with platinum is this. Let's go take a look at this. So she gets over her swing points, has the volume. That's set up is that we take $14.96 at its high. You take $13.92. So that's $100. Yeah, so it's on its way to $15.96. Yeah. $15.96 is game here. If I put this on a continuous contract, what you're going to see is this. We'll bring this back. I'll bring this back 10 years and put it on a monthly. And that's interesting. Yeah. So your first... Yeah, 1601. See, you know what's really cool, folks? I love it's great when you basically do the price projection first and then bring it back to a larger, in this case, chart. Meaning I brought it back a 10-year monthly, and what you can see is that your first swing point out here is 1558, but the setup that the swing probably wants to get into a 1601. So that is game up into that level. The thing that's really cool about platinum is this, is that the range it's actually in, the top of that range is $1,918. And in the context of where gold is versus where platinum is, bottom line, folks, inside the metal market, platinum is so much harder to get out of the ore, okay? It's just dramatically different. That's the first part. The second part is actually more important. The second part, it has to do with the amount of uses for platinum. When we take a look at gold, all the gold that's ever been mined, folks, guess what? It's still here. It's, it can be under the ocean for 3,000 years and still look great. So can platinum. But the difference is platinum is used in a huge basis to basically get poison out of the environment. Converters, trucks use a huge amount of platinum, and so it gets used on a continual basis. We'll see how this works going forward, but if you take the correlation between what platinum is trading versus where it could go, well, if I bring this back for you for a second, depending on how long you've been in this metals market, and I remember when this run took place, because it was an extraordinary run, what you had with platinum before it crashed is that platinum went straight up from 1,085 to 2,300. And then when the market was crashing, guess what? All bets off. $2,300 down to $761. You can see what happens. If you can get anything out of the market crash that happened in 2007, 2008 is this. When you don't have liquidity in markets and there's no cash in markets, everything is worth less money. Everything. Now what's going to be intriguing, and I'm going to bring this up for Z because I know Z loves any type of information about bonds, and I hope I can get this across before we end. But what has been happening in the repo market, folks, and this has only taken place in the last 3 or 4 weeks, is that there's been a dramatic amount of failures. And what happens with a failure in the repo market is that large banks refuse, they can't come up with the bonds that, in fact, they have to come up with for failure. It's a failure to deliver. Now, when you do a failure to deliver, and we're talking about short-term notes, actually, 2-year notes, when you come up with a failure to deliver, you have a 3% penalty. The thing that's intriguing about this is this. Here, there you go. See, not enough bonds. There's no doubt. And that's why the bond market, folks, wants higher price. There's not only not enough bonds, okay? What is going on is that the Treasury in general has issued $258 billion less in bonds this year. Let me get that number straight. Yeah, it's $258 billion less. And they're going to continue to issue less bonds. So deficit's going down. The bonds that are out in the system are less. And this is a liquidity problem that, could turn into some trouble, folks. It's not going to specifically turn into trouble for you and I. It'll turn into trouble for large firms that have to come up with the bonds at a certain time. Liquidity, cash flow is the name of the game. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need is right inside you, folks. Grab it and have a blast with it. Look forward to speaking to you right here tomorrow. Go get them, folks.